Welcome back to Alpha Recap, your post-market rundown from stockalpha.ai. Today we're walking through a volatile session that really repriced parts of the market. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Markets closed on May 21st with some pretty concentrated headlines driving big moves across tech, media, and healthcare.
Let's jump right in. Microsoft led the day with a massive decline. It finished down about 12% after disclosing aggressive AI spending and a CapEx outlook that surprised investors.
Yeah, that was the largest single drag on the S&P intraday. The CapEx figure that got everyone's attention was about $190 billion. That kind of number forces people to rethink free cash flow and margins.
So what really stands out here is how one company's spending outlook can shift sentiment across an entire sector.
Exactly. Investors had been very positive on AI beneficiaries, but when a dominant cloud platform signals much higher capital intensity, it raises questions about capital efficiency for the whole group.
And it wasn't all down. Spotify put in a big rally after its investor day and a new licensing pact with Universal Music Group.
Right. Spotify jumped roughly 13 to 15% intraday, depending on which quote you look at. The deal enables AI-driven covers and remixes and a paid add-on for premium users. So analysts treated it as a potential new monetization lever.
I mean, when you step back and look at this, that's the flip side of the AI story. Monetization versus cost.
Yeah, that tracks. Spotify's move shows how AI can create new product hooks that lift average revenue per user and margins. But the re-rating really depends on execution, getting users to pay for those add-ons and making the economics work.
Another big headline came from healthcare. Eli Lilly reported strong trial results for retatrutide, with weight loss in the high 20% range. Reports cited roughly 28%. That moved the needle for biotech assumptions.
Biotech traders loved that. Clinically meaningful efficacy like that reduces regulatory uncertainty and increases probability of near-term revenue upside in models. It's a classic event-driven re-rating.
Quick hits from the rest of the tape. Home Depot beat estimates and finished up about 3%. Walmart issued a weaker than expected outlook tied to gasoline pressure on shoppers. Ubisoft warned of an 8 to 9% sales decline and sank about 14%. And Stewart Information Services has been underperforming, down roughly 4% over the last 6 months.
Those are useful contrast points. Discretionary versus essential retail, and how guidance changes can ripple through valuations. Technology was one of the more dramatic areas today. Some names rallied, others were hit hard. It was not a great day for chip suppliers and some platform names after the Microsoft shock.
Let's step back and pull out the cross-cutting themes. First, AI showed two faces today, an upside catalyst and a stress test.
On the upside, we had Spotify's licensing deal reframing monetization expectations. On the downside, you had Microsoft's CapEx disclosure and reports that NVIDIA has largely conceded China's advanced AI chip market to Huawei. That complicates international growth assumptions for some players.
Right. And the other thing is valuation and earnings revision risk came back into focus.
Morgan Stanley flagged that peak valuation leaves IT hardware vulnerable. If earnings start to slip or guidance gets cut, multiples can compress quickly. Today's Microsoft and Ubisoft moves are concrete examples of how guidance and spending disclosures can force repricing.
So how should people think about the cash and concentration angle we saw with some private companies?
Good question. Filings around XAI and SpaceX highlighted liquidity and concentration risks. XAI reportedly generated $818 million of quarterly revenue, but had about $2.5 billion of operating loss. SpaceX's IPO prospectus showed items around $11.4 billion and $4.1 billion, with a concentration metric north of 65% tied to Starlink. Those are the kinds of numbers that make investors focus on cash burn and single business risk when a private company contemplates public markets.
Honestly, I was a bit surprised by the scale of those losses.
It's eye-popping, and it underscores why public market investors will demand clarity on path to profitability and how dependent a company is on one big business unit.
We should also mention industry-level coordination. A new semiconductor research hub at UCLA was funded by major players. That signals long-term R&D commitment, even as cyclical concerns persist.
Yes, $125 million to seed a research hub shows strategic, multi-decade thinking. Analysts note that long-term secular R&D can coexist with near-term hardware cyclicality.
Short reaction.
Right.
Let's run through the conflicting views people are debating after today's moves.
The key debates are optimism about AI monetization versus skepticism about the cost of getting there, global market access versus geopolitical and competitive realities, and valuation exuberance versus cyclical correction risk. Different analysts weigh those factors differently, so you saw diverging price action in real time.
Hold on, say that again? The NVIDIA China point?
Sure, Jensen Huang's comment that NVIDIA has largely conceded China's advanced AI chip market to Huawei reframes a lot of growth expectations. Some see it as structural revenue risk. Others emphasize NVIDIA's dominant ecosystem outside China. It's a meaningful geopolitical commercial tension. And to add to that, when a big hardware supplier faces constrained market access, it can pressure revenues and thereby earnings multiples across the supply chain.
Let's put this into practical context for different investor types. But remember, this is informational, not personalized advice.
Analysts note that growth investors will see a bifurcated story. Names with clear near-term monetization levers like Spotify and biotech catalysts like Eli Lilly got rewarded, while companies that need sustained capital outlays or face market access issues face pressure. Value and income investors should recheck cyclical exposure after warnings about hardware and consumer weakness. Look at retailers and margins. Event traders saw high alpha around the biotech readout and Spotify's Investor Day. And IPO watchers should scrutinize prospectus concentration and cash burn metrics for companies like SpaceX.
So what's the strategic checklist analysts are recommending to modelers and allocators?
Analysts suggest repricing models where guidance or CapEx disclosures materially change assumptions, quantify the impact of higher CapEx on free cash flow, and run slower monetization scenarios for AI services. Monitor leading indicators for hardware cyclicality, order books, inventory levels, and vendor guidance. Watch execution signals for AI monetization, adoption of paid add-ons, ARPU trajectory, and incremental margins. Stress test concentrated private to public stories and keep volatility management tools at the ready.
Right. And to reiterate, these are scenario frameworks, not specific investment recommendations.
Correct. Analysts note trends and potential implications, but this is not personalized investment advice.
Short reaction.
Yeah, absolutely.
Before we close, let's summarize the key takeaways from today.
1. AI remains a powerful catalyst, but the market is increasingly treating it as a test of capital efficiency. Spending plans can be a negative catalyst. 2. Single event catalysts like an investor day or a trial readout can create rapid re-ratings, but execution matters. 3. Private to public filings are shining a light on cash burn and concentration risk, which investors will scrutinize closely. 4. Keep an eye on hardware cyclicality signals. They can flip valuation assumptions quickly.
Good, crisp takeaways. Final thought?
The market closed today with a clear message. The story is not just about technology or science. It's about who can monetize efficiently and who can manage capital intensity. Analysts are split on timing, but they broadly agree that both AI and biotech catalysts remain central to the narrative.
If you want to dig into any of today's moves, or if something we covered raised a question, head to stockalpha.ai and post your question in the Q&A. We'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap.
Thanks. Talk to you next time.